Diving into our multiple choice questions here for S-Corps, our first of our two S-Corp lessons. Starting off, we've got absent an election to close the books, the allocation of non-separately stated income or loss for an S-Corp shareholder that changed his ownership interest during the year is computed based on which of the following ownership percentages? That one's a doozy. It's a good question. Let's dive through, talk about it, see what we got. Well, this is something you can memorize for sure. There's a lot of things in this exam you can memorize, but if you don't have it memorized, that's totally okay. At the end of this question, I do recommend this is something you memorize, but let's also talk about it and understand it. Starting off first, we see ownership percentage determined as an average of the beginning and ending ownership percentages. Because guess what? During the year, in the beginning, January 1st, you could have a different ownership percentage than you do at the end. Because as people buy and sell in and out of the S-Corp, yeah, that can totally change. But is this the proper method? Well, when an election to close the books is not made, the allocation is generally based on, and it's hard to say without just spoiling the answer, but this is not going to be the case. Is it based on simply just the beginning or just the end? Not that either. And again, I kind of couldn't really say it, couldn't really talk about it without just spoiling it. It is going to be computed on a per share, per day basis. So allocating your items, if for 6 months of the year, there's $10,000 generated for the first 6 months, and you have 100% ownership, well, 100% of that $10,000 will go to you. And then if for one day someone purchases the other half of the company and then they sell it, well, guess what? 1 divided by 365 times the amount of income that was generated then, that's going to, and times 50%, that's going to go to you. So it's per share, per day, and then multiplied by the income or loss. That's how it's going to work. We could see complex questions with that, but this is really the gist of it. This is the majority of what you really need to know. So take that, memorize it, be familiar with it, and you'll be good to go. Next up here, the tax on built-in gains is a corporate level tax on S corporations that dispose of assets that, well, first off, what's the whole purpose of this? We talked about this in the lesson, and the purpose of the built-in gains tax is to prevent C-Corps from creating significant unrealized gains and electing to become an S-Corp to avoid the double taxation here, right? Because that would kind of defeat the whole purpose. If you're a corporation and you have all these assets that appreciated, you can't just say, oh, well, let's become an S-Corp because then we don't have double taxation on distributions, right? So that's a little taking advantage of the tax code, and as such, that's why this built-in tax on gains exists. And what are we going to see? Well, appreciated within 12 months of electing S-Corp status? No. Again, this has to do with becoming a C-Corp. Appreciated 10-year? Nope. That's, sorry, 10, yeah, that's not at all. Nothing like about that sounds correct. Appreciated while the company was an S-Corp? No, anything that appreciated while it's an S-Corp is going to not be subject to double taxation. And then lastly here, letter D, appreciated while the company was a C-Corp. That's totally going to be our answer. Again, the whole point, if you've got a bunch of assets, machinery, cars, factories, stocks, and they all accumulate and they all appreciate in value while it's a C-Corp, you can't just become an S, well, you can become an S-Corp, but you can't become an S-Corp just to avoid the tax on the distributions of those. You will have to pay tax through this built-in gains tax. And that's it. That's about a wrap. Hope you all enjoyed these questions. I know I am, and I hope you're having a great day. Keep going through and practice, practice, practice. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.